Here are the crypto top headlines covered in this video. Pundit identifies last XRP buy-in opportunity before it hits $2. Next, DOJ challenges motion to dismiss Tornado Cash co-founders' charges. Also, DTCC rules out collateral for Bitcoin-linked ETFs. Welcome to Crypto Top Headlines, where there's no clickbait thumbnails or titles, and no speeches on my opinions, just bringing crypto's news to you. We have a quick request that doesn't cost you anything in order to help. Help us grow this channel to 1,000 subscribers by September, which would be our channel's 1-year anniversary. All we ask is that you click on the like and subscribe buttons, as well as the notification bell. By clicking on these, it does help grow the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline: Pundit identifies last XRP buy-in opportunity before it hits $2. Prominent crypto commentator Henry believes XRP is now at a final bargain buy-in opportunity, projecting an incoming $2 price for the asset. Henry recently voiced this view on X, noting that an XRP investment at around 50 cents is a favorable entry position. He believes individuals loading the asset at this range stand to reap life-changing profits upon the full emergence of the bull run in the 2024-2025 season. Last XRP buy-in opportunity before $2. The accompanying charts identified support zones for XRP between the 50 cent and 40 cent thresholds. 2 weeks ago, XRP revisited this range following a 20% price collapse influenced by Bitcoin. While XRP swiftly recovered and re-entered the 50 cent range, it repeatedly retraced into the 40 cent price level. However, 7 days after the crash to 43.3 cents, XRP has regained a firm footing above 50 cents. For instance, the asset soared to a high of 56.91 cents in the last few days. Observing this commendable comeback, Henry asserted the XRP is at the final stage of its cheap territory before the much-awaited post-halving bull run. According to him, XRP is ready for the moon. He disclosed his ultimate target for XRP this season to be $2. What XRP at $2 by 2025 means. Notably, Henry's target falls within some of the unambitious outlooks for XRP this season. The $2 projection substantially contracts the view of other market commentators who have argued for a $20 point. Interestingly, some pundits consider even a $5 price point conservative. Furthermore, the prospect of XRP reaching $2 by 2025 suggests that long-term investors in XRP may face additional years of holding their investments without seeing satisfactory profits, given that this price falls short of the $3.84 peak observed in 2018. Recently, there has been growing concern among XRP enthusiasts about missing out on the current bull run. This apprehension gained traction particularly because XRP has consistently traded below $1 during the early stages of this bullish period, showing minimal movement. Nonetheless, XRP at $2 translates to a substantial 288.5% gain for individuals entering the XRP market for the first time. As for long-term holders, they would still be shouldering a 47.916% deficit in their XRP investment. Let me pause here for a moment. If you're getting value out of this video, please click on the like and subscribe buttons as well as the notification bell. Our next top headline: DOJ challenges motion to dismiss Tornado Cash co-founders' charges. According to the filing, the DOJ criticized Tornado Cash's co-founders for inadequate changes to exclude sanctioned addresses. The United States Department of Justice has opposed a motion to dismiss conspiracy and money laundering charges against Tornado Cash co-founder Roman Semenov. It argued that the defense's filing raised disputed facts for jury consideration, which is unsuited for early-stage motions. In the DOJ's response, the prosecutors analyzed why the Tornado Cash co-founder should answer for the alleged crimes levied against him. The DOJ contested the defense's characterization of Tornado Cash, noting it was introduced in 2019 as a crypto mixer. The service comprises a website, a user interface, a set of smart contracts, and a network of relayers. The DOJ accused Roman Storm and fellow developer Roman Semenov of conspiring to commit money laundering, operating an unlicensed money transmitter, and violating sanctions by creating Tornado Cash, a crypto mixing service. U.S. authorities claim that entities like North Korea's Lazarus Group used Tornado Cash to launder funds. In September 2023, Storm pleaded not guilty to all charges and was released on a $2 million bond shortly after his arrest. He is primarily restricted from traveling outside some areas of New York, New Jersey, Washington, and California. However, in late March, Storm's attorneys sought to dismiss the indictment by arguing that authorities lacked grounds to charge him. Semenov clarified that he contributed to code design but is not accountable for its use. Semenov's legal team's motion to dismiss emphasized that Tornado Cash does not operate as a custodial mixing service and does not meet the criteria for a financial institution. They claimed Storm had no control over the service to prevent entities like Lazarus Group from using it. Damian Williams' led team of prosecutors argued in the filing that Semenov was accountable for operating the cryptocurrency mixer and accused him of developing systems aiding criminals in anonymity. They criticized Tornado Cash's co-founders for inadequate changes to exclude sanctioned addresses. This comes as the U.S. government continues its crackdown on crypto mixing services. On April 24th, the co-founders of Samurai Wallet, a cryptocurrency mixer, Samurai Wallet CEO Kian Rodriguez and Chief Technology Officer William Hill were arrested and charged with conspiracy to commit money laundering, which carries a maximum sentence of 20 years, and conspiracy to operate an unlicensed money transmitting business, which carries a maximum sentence of 5 years. Kai-Yong Ju, CEO of CryptoQuant, stated that crypto mixing services are not inherently criminal in response to the recent arrest of the founders of Samurai Wallet. Our next top headline, DTCC rules out collateral for Bitcoin-linked ETFs. This notice means that exchange-traded funds and similar investment instruments with Bitcoin or other cryptocurrencies as underlying assets will not be assigned any collateral value. The Depository Trust and Clearing Corporation, or DTCC, a financial services company that provides clearing and settlement services for the financial markets, stated that it will not allocate any collateral to exchange-traded funds, or ETFs, with exposure to Bitcoin or cryptocurrencies and will not extend loans against them. DTCC's announcement states that effective April 30th, 2024, the DTCC will implement changes to collateral values for specific securities during its annual line of credit facility renewal, potentially affecting position values in the collateral monitor. This notice, released on April 26th, means that ETFs and similar investment instruments with Bitcoin or other cryptocurrencies as underlying assets will not be assigned any collateral value, resulting in a 100% reduction in their collateral value. However, in an ex post, cryptocurrency enthusiast K.O. Cryptowaludi clarified that this would only apply to inter-entity settlement within the line of credit system. A line of credit is a borrowing arrangement between a financial institution and an individual or entity that allows the borrower to draw funds up to a predetermined credit limit. The borrower can access these funds as needed and typically pays interest only on the amount borrowed. According to Cryptowaludi, Using cryptocurrency ETFs for lending and as collateral in brokerage activities will continue without impact, depending on individual brokers' risk tolerance. While DTCC has taken a stand against crypto ETFs, the same is not valid for other traditional players. Goldman Sachs clients have begun re-entering the crypto market in 2024, driven by renewed interest following the approval of spot Bitcoin ETFs. The introduction of spot Bitcoin ETFs in the United States has spurred increasing institutional interest in this investment product. Within 3 months of their launch, all U.S.-based Bitcoin ETFs have accumulated over $12.5 billion in assets under management. In February, an estimated 75% of new Bitcoin investments came from the 10 spot Bitcoin ETFs approved in the U.S. on January 11th. However, net inflows to the ETFs have recently slowed down. Multiple ETF issuers have reported significant outflows recently. According to Farside Investors, spot Bitcoin ETFs in the U.S. saw a net outflow of $218 million on April 25th, following a $120 million outflow the previous day. Grayscale's GBTC ETF saw a notable single-day outflow of $82.4197 million. According to data from Farside, the total net outflows from GBTC is a substantial $17.185 billion. So this concludes Crypto Top Headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.